So we have two topics to discuss today. Happy Wednesday, Angela. Two topics to discuss today. First is figuring out the new Fed. Of course, we have a new chair at the Fed, Kevin Warsh, and there has been a lot of debate in the market among economists, among strategists and investors, what to expect from Kevin Warsh. He spoke again today, and he didn't shed too much more light compared to his first press conference that he gave a couple weeks back following the Fed meeting. But we're going to make our best educated guesses on what to expect. And then we're going to talk about Trump and is he reading his support base right, particularly as it relates to Iran. So let's begin with the Fed. And obviously, the Fed is one of the most important drivers of the stock market, of the bond market, of currency markets. So it's incredibly important to really have a good framework to understand the Fed and the Fed chair. So that's what we're going to really try to do, to develop a framework. We're not going to be able to answer all the questions today that we have, but at least we'll have an approach on how to think about Kevin Warsh and his Fed. So when in the days following Warsh's first press conference that he gave a couple weeks back after the Fed meeting, the debate really broke into three major groups, three major camps on how to see Warsh and the way he was going to run his Fed. And the first group of economists and investors and strategists, they categorized Kevin Warsh as a real inflation hawk. And if you listen to his speech, he really pounded the table. And today, when he spoke again today at a conference sponsored by the European Central Bank, and he was very crystal clear. He stated very clearly that the Fed has a 2% inflation goal. And the Fed has been missing that goal for the past 5 years. Now it's over 5 years. And he characterized inflation as being a choice. And implicitly, he's suggesting that the Fed ran monetary policy too easy. That is, they either printed too much money or they kept interest rates too low. And because of that, they permitted inflation to run well above its inflation target. Now, because of this message, the many economists, many investors. Excuse me, I just need to plug something into my computer so I don't run out of power here. Give me 1 sec. Okay. Because of this message, many economists decided that Warsh is a real inflation hawk. Yes, he got the appointment from Trump because Trump thought he was going to cut interest rates, but Warsh did not send that message at all. Warsh sent quite the opposite message, that he's going to do whatever it takes to bring inflation down. And usually whatever it takes means higher interest rates. And as a consequence, following that press conference that he gave a few weeks back, the stock market fell pretty hard, and the dollar rallied pretty dramatically against every single currency in the world, the euro, the pound, the yen, the Mexican peso, you name it, the dollar rallied. Because if the Fed is going to be tougher on inflation, they're going to raise rates, higher interest rates almost always means a stronger dollar and a lower stock market. And that was the reaction. Now, it's important to note that, when we think about inflation, There are a few temporary factors that have driven inflation above the Fed's 2% target. Okay. Inflation right now is running at about 4.1%. Now, 1% of that rise above 2%, 2% being the target, 1% is completely driven by oil prices. Okay. So if you were to normalize oil prices, that would take inflation back down to 3.1% from 4.1%. Okay. Again, we said inflation is running at 4.1. If you adjust for oil, that would get you down to 3.1% inflation. And oil, in fact, has normalized, right? Since the ceasefire began on April 8th, and then more recently with the opening up of the Strait of Hormuz, as these negotiations began with Iran, oil prices have come all the way back down to where they were before the war with Iran began. So in the months ahead, okay, and this doesn't happen instantaneously, it takes time, but one would expect that over the next 6 months or so, inflation should come back down by a full percentage point down to 3.1%. But that still leaves the Fed above its 2% target. Now, the other thing that we know is that the inflationary effects of tariffs at this point are still probably adding about 0.5% to inflation. So also in the coming months, the worst of the tariff impact is behind us, okay? But we still have inflation about 0.5% above where it should be because of the lagged impact of tariffs. And that's also going away. And as I said, that the tariffs add about 0.5%. So if you remove tariffs, that would bring inflation down to something like 2.5, 2.6%. So that's still above the Fed's 2% target. So how does the Fed squeeze that final half a percentage point out of inflation to get it to 2%? Well, Kevin Warsh hasn't answered that question explicitly, but those who see Warsh as a hawk are convinced that he's going to need to raise interest rates. Maybe if this were Jay Powell, he wouldn't raise interest rates, but Warsh sent a very, very clear message that inflation is a choice, and as long as inflation is above 2%, the Fed is making a choice to allow inflation to run too hot, to run too high. So this hawkish camp of economists and investors and strategists are all entirely convinced that Warsh is going to raise interest rates at some point, and that could be as early as the next meeting in July. Okay, so that's the first camp. Now there's a second group, and the second group of economists and investors argue that with oil prices dropping so dramatically, and oil has been, at least in 2026, the main driver of higher inflation, there's no way that Warsh and the Fed are going to raise interest rates while oil prices are dropping, right? Because that main inflationary pressure is disappearing. And it would sort of be reckless for the Fed not to take a wait and see approach, watch what happens as oil prices normalize, watch what happens as the impact of tariffs fades, and let's see, maybe inflation won't stop coming down at 2.5%. Maybe that's not the floor. Maybe the floor actually is 2% or lower, and the Fed is going to take a wait and see approach. Now, Warsh today in his talk did say that some of the inflationary pressures that he spoke about when he last addressed the markets after the Fed meeting, those inflationary pressures are not entirely fading, but they're lessening. Okay. And that was something new. That was a nuance to what he said today. Okay. And that's important. Now, the initial impact to his comment was the stock market, which was down sharply. Futures were down sharply this morning. The stock market recovered, and as I was, coming into this meeting, the stock market had turned green, and also, at least very temporarily, briefly, the dollar weakened. Right, we saw the dollar weaken against most currencies. Now it's stronger again, but on the back of his comments, the dollar also weakened. So the market is paying attention to a slight dovish turn by Warsh. The other thing that Warsh said, which was interesting, Warsh, before he was appointed to the Fed, he spent a lot of time over the last year saying that AI technology would be disinflationary. That is that because of these tremendous technological advances, workers would produce more per hour of work. And when you produce more goods per hour of work, that's more supply. And anytime there's more supply of product on the market, if supply exceeds demand, prices decline, and that should help bring down inflation. Now, this is a controversial topic because most economists agree that yes, in the long run, AI, the productivity gains from AI will bring inflation down. But in the short run, because there's huge demand for from these AI companies for more data centers, that means more construction materials will be needed, more energy will be needed. In the short run, this huge demand for build out of AI infrastructure could cause an inflationary pressure. Okay, so this is a hotly debated topic. Warsh has, over the last year, taken the side that AI will bring down inflation. But when he spoke at his press conference following the Fed meeting a couple of weeks ago, he was very balanced on the subject. He did not commit this time. He sort of backed off saying that it would be deflationary. But today, he leaned in a bit more to the idea that AI technology would help bring down inflation. Okay, so if you want to compare Warsh today to Warsh 2 weeks ago, Warsh was a bit more dovish today. And I would say it makes it a bit less likely that he's going to be gearing up to raise interest rates. It seems to me he's going to give it some time, and he's going to allow the impact of lower oil prices filter through. He's going to give time for the impacts of tariffs to fade, and he's not going to be in such a rush to raise interest rates. So this is, I think, a subtle, a nuanced shift from what Warsh stated a few weeks ago, and I don't think investors kind of paid that much attention. I'm sort of emphasizing these points. He was much more subtle and balanced in his remarks, but I think it was noteworthy. Now, another important speaker at the Fed addressed the markets a few days ago, and this is John Williams. John Williams, I would say, is the third most important voice at the Fed. Kevin Warsh, of course, is the first most important. Chris Waller, another important member of the Fed, is the second most important voice at the Fed. And then John Williams is the third most important. And he's someone that I follow very carefully. And he definitely came down, surprisingly not so concerned about the inflation pressures that we've seen recently. And I'll just give you some of the highlights of his talk. He said that he expects inflation to moderate over the coming quarters. So he's not looking at this necessarily on a month-to-month basis, but over over the next few quarters. So he's going to be patient. He did say that inflation remains elevated right now and well above the 2% inflation target. That's undeniable. But he expects in the coming quarters for inflation to start to come down. And he said that, and this is really important, that he believes the current stance of monetary policy is already restrictive enough. In simple language, he thinks interest rates, Fed interest rates, are sufficiently high right now to be able to bring inflation down. That is to say, we're well positioned. We don't need to raise interest rates anytime soon. And because oil has come down, interest rates are where they should be to allow inflation to come down in the coming quarters toward our inflation target. And again, I want to underline his patience. He said he expects inflation to fall roughly to 3.5% by the end of this year. Remember, inflation right now is 4.1%. So by the end of this year, he expects it to be 3.5%. And he doesn't expect inflation to reach the Fed's 2% target until 2028. So he thinks all of next year, the Fed will be missing its target. That is to say, inflation will be above 2% for all of 2027, and it won't be until 2028 until the Fed reaches its inflation target. And that's good enough for him, right? He doesn't think the Fed needs to hurry along that deceleration in inflation. He thinks the Fed should just stay where it is, be patient, let the economy do its work, let lower oil prices filter through, let the impact of tariffs fade, and the economy will take care of itself. The Fed doesn't need to do anything more. And again, this guy is in a very important voice. And if he says it, taken together with what Warsh says today, I think we're going to have a pretty patient Fed here. Now, he did have a caveat that if we see a flare-up for some reason that the Fed wasn't expecting, maybe oil prices jump again, maybe they go back, to 115, 120 a barrel. That could change his calculus, right? So it's not that there aren't risks, there are always risks, but his base case scenario is that inflation should be coming lower. Now, let me tell you what struck me most is what John Williams did not say, okay? What he did not say is inflation expectations are becoming unanchored. What does that mean when inflation expectations become unanchored? It means that normal people in the country start to expect very high inflation for years to come, right? He didn't say that. Why didn't he say that? Because if you look at inflation expectations, they look fine. There's all sorts of indicators, market indicators, which tell you that the average American expects inflation to be somewhere around 2% in 5 years from now. So despite the fact that the Fed has been missing its inflation target for 5 years in a row, Americans aren't expecting them to continue to miss their target. Americans are expecting inflation to come back down to 2%. So that's good. And John Williams did not express any concern about inflation expectations. He also did not argue that this higher inflation that we've had for 5 years, it doesn't represent what economists would call a regime shift, okay? That is, we're operating in an entirely new world, right? The last 5 years represents a dramatic change from the world we lived in for the last 15 years. And this new world is a world of higher inflation. You hear a lot of economists make this argument, right? The world has changed. China, we can't rely on China as a low-cost supplier of goods to the world anymore. The Trump's higher tariffs have curbed global trade, so we can't rely on cheap products globally to be imported into the United States, right? Many economists talk about this as being a regime shift. And because we have a regime shift, we can't count on inflation to being 2% anymore. It's probably going to ratchet up to, 3% or higher for years to come. And if the Fed wants to adapt to this new regime change and bring inflation back down to 2%, we're going to have to live with much higher interest rates going forward, right? You hear a lot of Wall Street economists talk in these terms, but John Williams did not. And that's very noteworthy. And in fact, I haven't heard any of the heavyweights at the Fed talk in these terms. So that is indicative of a Fed that is not going to rush to raise interest rates. The other thing Williams didn't say, right, which again you hear a lot of economists talk about, he didn't say that the Fed is behind the curve, right? What does it mean that the Fed is behind the curve? It means that the Fed made a major blunder. It should have raised interest rates a month ago, 3 months ago, 6 months ago. They sort of missed the boat, and that's why inflation is up so high, and now they're going to need to play catch up, right? He didn't say that. So these are extremely, extremely important points that he did not make. And in fact, if I had to summarize John Williams's message in just one sentence, it would be the following. Inflation is still too high, but we largely understand why, right? It's because of oil prices and it's because of tariffs. And both of those factors are fading away. And therefore, we expect inflation to come down without needing a dramatic change or any change in our interest rates. Okay? And today, Warsh did not contradict that. Okay? So, again, Williams is a very important voice. And I think a lot of people, after Kevin Warsh spoke at the last OFOMC, overreacted. But today we get Warsh speaking and John Williams speaking. There's a lot of consistency between the message. John Williams gives a lot more detail than Warsh does. Warsh doesn't believe in having a really transparent Fed. He doesn't believe in oversharing. He thinks the Fed should keep a lot of information to itself. So Williams's message was more revealing than Warsh's, but the two messages, I think, were very, very similar. So that is all pretty good news for the stock market, because the stock market doesn't react so well if the Fed starts raising interest rates. Now, I'm waiting to see what Christopher Waller says. He has not addressed the public in quite some time. And I mentioned he is the second most important person at the Fed. So I eagerly await to hear him address markets, hopefully in the next couple of weeks. So that covers two camps. There's the hawkish camp, the camp that sees Warsh as a hawk and the new Fed as being very hawkish. Then there is the camp that says, wait a second, I think you're sort of getting ahead of yourself. This Fed really isn't all that different from what we saw under Jay Powell. There's a lot more continuity than many people think. And so that's the second camp. And I'd say the second camp is looking pretty good right now. But there's a third camp. And I'd say the third camp of economists, it probably presents the most sophisticated argument. This camp argues that Kevin Warsh, was appointed. And this is something that Trump isn't really aware of. This is something that Scott Bessent, the Treasury Secretary, sort of worked on behind the scenes. He brought in Warsh to push the government to reduce the fiscal deficit. Okay. Now, this is a topic we talked about early on when Trump, first became president, Scott Bessent used to talk about his 3-3-3 target. 3-3-3. What is 3-3-3? Well, he had a 3% GDP growth target. Okay, so the economy would grow by 3% a year. He had a 3% fiscal deficit target, right? So the government should not run a deficit greater than 3% of GDP. Right now, the government's deficit is 6% of GDP, so double of what Scott Bessent wanted to achieve. And the third three relates to oil output. The goal was to increase US oil output, oil production by 3 million barrels a day. But we're just going to focus on really the middle three, the 3% fiscal deficit for now. So our fiscal deficit has grown dramatically in recent decades. And every time we have a major economic crisis, the government goes on a big spending binge, and our deficit blows out, and the government issues a lot more debt to finance its deficit, and our debt to GDP ratio explodes. Okay, so just to give you an example, before the 2008 financial crisis, we had a very small fiscal deficit. Maybe it was about 1% of GDP. The crisis comes along, and our fiscal deficit blows out to about 12% of GDP. And our debt to GDP ratio, and it stayed very large for years. So going into the 2008 financial crisis, our debt to GDP ratio was about 40%. We came out of by 2009, 2010, the government debt to GDP ratio went from 40% of GDP to like close to 70% of GDP. So it ballooned. And then with the COVID crisis, we had another massive deficit. It blew out to something like 17% of GDP. And it stayed large for many years, and it's still large at 6% of GDP. And our debt to GDP ratio went from 70% all the way to just over 100% of GDP, where it is today. So one of the big reasons that our deficits are so large today, it's less because, we are spending too much, but a lot of our deficit has to do with much higher interest rates, right? Right now, our interest rate is at about 4.5%. The 10-year bond yield is about 4.5%. If you were to go back to 10 years ago, the 10-year bond yield was under 2%. So that 250 basis point increase in the 10-year bond yield, right, going from a bond yield of 2% to 4.5%, that adds a few $1 trillion a year onto our fiscal deficit. So Scott Bessent wants to bring our bond yield down, that 10-year bond yield. He wants to get it from 4.5% to like 2%, right? And if he could do that, he would dramatically shrink the fiscal deficit. But how do you do that? How do you bring our 10-year bond yield down? Okay, that is no easy feat. The easiest way to do it would for the government to just slash government spending. Okay, if the government slashed its spending, that in and of itself would reduce our fiscal deficit, but it would also ease those investors who lend money to the government. It would ease their concerns, and they would charge the government a lower rate on their bonds. Okay, so bond yields would drop instantaneously if we were to cut government spending. But that isn't happening. right? Remember what happened with the Doge? Elon Musk came and he wanted to slash government spending. Whoever talks about the Doge anymore? Nobody, because it turned out to be a failure. We didn't end up cutting government spending. So Scott Bessent is trying to bring down the deficit a different way. So he brings in Kevin Warsh, and Kevin Warsh wants to shrink the Fed's balance sheet. Okay, what does that mean to shrink the balance sheet? Well, the Fed, the Federal Reserve, owns a huge number of government bonds, right? And those bonds are sitting there on its balance sheet. Why is that? Because of all the money printing it has done every time we've had a financial crisis. So right now, the size of the balance sheet is about $6.74 trillion. Okay, that represents 22% of our GDP, 22% of the size of our economy. A good chunk of that, 4.5 trillion of that balance sheet, is made up of government bonds, US Treasuries. Most of the rest of it is government mortgages. Government mortgages are about $2 trillion. And then there's some other assets as well that the Fed holds on its balance sheet. Now, again, I mentioned that the size of our balance sheet, the size of the Fed's balance sheet is $6.7 trillion. The peak was in 2022, shortly after COVID, when the balance sheet hit $9 trillion. Okay, and again, that's because of all the money printing the Fed did during the COVID era. When they print money, when the Fed prints money, what does it do? It merely goes into the market and it buys up government bonds. It takes those government bonds off it buys them from banks and pension funds, and then it pays banks and pension funds cash. That's money printing. So in 2022, when the Fed's balance sheet hit $9 trillion, that represented 37% of our GDP, 37% of the size of our economy, right? Today it's 22% of our GDP. In 22, it was 37% of GDP, right? That is just massive. Just to give you a point of comparison, before the 2008 financial crisis, so before the Fed went on these big money printing binges, the Fed's balance sheet was 900 billion, right? Remember, it got all the way up to 9 trillion. It was just 900 billion in 2008 before the financial crisis. 900 billion at that time was just 6% of our GDP. So see how it's exploded? 6% of GDP prior to the financial crisis. Then it went all the way up to 37% of our GDP. And now the Fed's balance sheet is back down to 22% of our GDP. But before 2008, before that financial crisis, the Fed's balance sheet was just 6% of GDP. That's all the impact of money printing. Okay. Now, what about just before COVID? Okay, I'm giving you all these numbers for a reason. Just before COVID, the Fed's balance sheet was about 4.2 trillion. Remember, I said it's 6.7 trillion today. 4.2 trillion represented 20% of our GDP versus 22% of our GDP today. So Warsh wants to shrink the balance sheet, right? He wants to shrink the balance sheet, probably to get it back down to about 4.5 trillion or so. Okay, maybe not even 4.5 trillion, maybe 5 trillion. Maybe he just wants to shrink the balance sheet by $1 trillion. And that would restore the balance sheet to where it was roughly before the COVID crisis. Now, why does he want to do that? He wants to do that mostly to impose discipline on our politicians. Because politicians right now think they can spend and spend and spend. And under a worst case scenario, the Fed will be there to print money and to just buy government bonds, right? It will replace, and during times of crisis, it replaces the private sector, and it just buys up all the bonds that the government needs to sell. Now, during normal times, the Fed doesn't do that. But politicians have this tendency to believe, you know what, if things really get dire and our deficits get too large and we can't sell our bonds to the private sector, the Fed will just step in like they do during financial crashes. They'll step in and buy the bonds. And Warsh wants to send a message to the politicians. We're not playing that game. We're going to shrink our balance sheet. You guys, you politicians, better get disciplined in your fiscal spending. So Bessent wasn't able to force President Trump to get disciplined, right? The Doge failed. So this is Bessent's backdoor way of imposing discipline on the President of the United States and on Congress. Okay, it's very interesting. It's very subtle, right? It's not something that is explicitly discussed, but it's pretty clear that this is what they're doing. Now, why am I so convinced that this is what they're doing? Because Scott Bessent, for a period of time, worked under a hedge fund manager by the name of Stan Druckenmiller. And the two of them have remained pretty close. And Druckenmiller employed Kevin Warsh before Kevin Warsh moved to the Fed. So this is an alliance between Stan Druckenmiller, Scott Bessent, and Kevin Warsh. And the three of them have a plan. Now, will this plan work? It's not going to work nearly to the extent that they'd like it to. We're not going to return to deficits of 3% of GDP, right? That's a long way off. But it's conceivable that the fiscal deficit could shrink. Now, if Warsh can just succeed, okay, on curbing, if you notice, he talks very tough on inflation, right? He said inflation is a choice, and the Fed has made the wrong choice. From now on, we're going to make the right choice. If he can convince the market that he's going to be tougher on inflation, and therefore inflation comes down faster, right? If he talks really tough, he could actually have a positive impact on inflation expectations. And inflation might come down faster than it would have otherwise. And if that were to happen, if we can get inflation down to 2% faster than, by sometime in 2028, 10-year bond yields could come down to 4%, to 4%, to 3.5%. And if that were to happen, interest payments on government bond yields would be reduced, and that could help the government reduce its fiscal deficit pretty significantly. Again, we won't get deficits of 3% of GDP, but maybe we could get deficits, instead of being 6% of GDP, to 5% of GDP, and that would be a pretty big improvement. So this is the third camp, right? The third camp. So the first camp says Warsh is a hawk. The second camp says that, you know what, he's not that, he talks really tough, but he believes that oil prices have come down. He believes that AI is going to bring productivity gains, and therefore he's going to be patient with inflation. He's going to continue to talk super tough, and a less transparent Fed might scare the market and help bring down inflation expectations, but he's not going to raise interest rates. The third camp is the most sophisticated argument of all. And the third camp says, you know what, whether he's a hawk or not a hawk, that's not the most important thing. The most important thing is he's going to reduce the Fed's balance sheet. He's going to talk tough, And the goal is to bring down the 10-year bond yield to help reduce the government's fiscal deficit. And that's the real reason why Warsh was appointed to the Fed. Okay, so these are three ways of thinking about it. I think, I'm dismissing, not entirely, but pretty much, the first view. I don't think that Warsh is going to be trigger happy and going to start raising interest rates at the next Fed meeting. But I think number two and number three, those two camps are onto something, and it'll be really fascinating to watch Kevin Warsh operate in the weeks and months to come. Okay, let's now move to the next topic, which is Trump reading his base right. So let's start with the following question. Where are we right now on American sentiment toward the war with Iran? And even though we're in a ceasefire, I think it's appropriate to still call it a war. Well, let's begin with what the Democrats say, okay? The Democrats say that this all began in Gaza. This whole conflict began with Gaza. And Gaza is a genocide, right? It's plain and simple an absolute genocide. That's what the left says. The left has been completely taken over. The Democratic Party has been completely taken over by the left. You really have no future to be a leader in the Democratic Party unless you say that Gaza was a genocide. Of all the important issues that America faces, right? People talk about, the fear about AI taking jobs, that housing prices are too expensive, that inflation is too high, issues with healthcare. The litmus test to get anywhere in the Democratic Party today is you must say that Israel committed a genocide in Gaza. That's it. That's the purity test. Now, this, of course, is a blatant lie. And most people who say there was a genocide in Gaza, they know it's a blatant lie. They know it for a fact. And all you have to do is take 5 minutes to look at the data, and you know it's a lie. Why? Because the population in Gaza before the war started was the same as it is today, right? Exact same as it is today. There were about 2.3 million people living in Gaza before the war. There's about 2.3 million people living in Gaza today. A genocide would mean that at least 50% of the population got wiped out, right? Now, the fact that the population remained unchanged is pretty remarkable because a lot of people, not enough, like a lot of Gazans would like to leave, but the borders were shut, right? Egypt didn't let them out. The Arab countries didn't let them out. They didn't want the Gazan people into their countries. So all these countries sealed the border, but people did get out. So estimates are somewhere around 150 to 170,000 people from Gaza did manage to escape. So you would think that the population would have shrunk somewhat, but it didn't. Now, about 40,000 Gazans were killed during the war. Half of those people were Hamas terrorists. So that means for every combatant, for every terrorist that was killed, one civilian was killed. Now, military experts who study wars, they look at something called the civilian to combatant ratio. This is pretty much a 1-to-1 civilian to combatant ratio. That is, for every civilian killed, there was one combatant killed. That's the lowest civilian combatant ratio in all of history of any war ever fought, especially striking in urban warfare where the Hamas terrorists are doing all they can They're making their absolute best efforts to get as many Gazan civilians killed as possible, right? So how could it be where Hamas is trying to get their own civilians killed, right? They're hiding behind them. They're hiding in schools. They're hiding in hospitals, right? All their all their they themselves go underground and they hiding in tunnels and they leave the civilians above ground. They're doing everything they can to get as many civilians killed as possible. How is it that Israel was able to achieve this almost miraculous feat of having the lowest civilian to combatant ratio in history? How's that possible? Because no military in history has been so careful to try to avoid civilian casualties. In fact, since the war started, 1,000 IDF soldiers were killed. That is an enormous, enormous amount of soldiers killed. Remember, Israel's a very small country. Because they were going house to house rather than just dropping bombs everywhere the way America does when we fight wars, right? Historically, that's what we've done. We're not very cautious when we go into warfare, right? How did we win World War II? How did we conduct Vietnam? Our biggest wars, we kill enormous amounts of civilians. But Israel does quite the opposite, right? Forget about, talk about Russia and other countries, right? But even the United States, we kill a lot of civilians. Israel doesn't. And they sacrifice their own soldiers' lives in order to preserve the lives of Gazan civilians. And this is especially remarkable because Gazan civilians are not like normal Western civilians. They absolutely love it when Israelis are killed. In fact, just to give you a little anecdote, I just finished reading a book. It's called Hostages, written by one of the Israeli hostages that was, held in Gaza by Hamas for hundreds of days. And he makes a point to say that anytime he came out of the tunnels in Gaza, the Hamas terrorists had to protect him and protect all the hostages from being murdered by the civilians in Gaza, right? Because if the civilians in Gaza could have gotten their hands on him and all the other hostages, they would have torn him limb to limb alive. They would have shredded him. Now, Hamas needed him alive because he was of great value. They could get something in return by releasing him. But the average person living in Gaza would have torn these Israelis to pieces. So the Israeli army is protecting civilians, so-called civilians, who are actually, we call them civilians, but
Yeah, one second.
they're not civilians like we normally think of civilians. Now, why did I go into detail about this? Because on the left, they say Israel committed a genocide. And I said it's a blatant lie. And everyone knows it's a lie. And if you don't know it's a lie, you can discover that it's a lie in about 5 minutes or less. Okay? But in order to go anywhere in the Democratic Party today, you have to pass the purity test. You cannot be anyone in the Democratic Party these days without saying the word genocide when it comes to Israel and Gaza. So take someone like John Fetterman, who is one of the only politicians, he's a senator from Pennsylvania, who says that Israel has every right to do what it needs to do to defend itself. He is a supporter of the U.S. fighting the Iran war. He's a supporter of Israel doing what it needs to do against Hezbollah and Hamas and Iran. John Fetterman is the only one who sees the world clearly in the Democratic Party. He's not afraid to speak out, but clearly he would have zero chance of ever, going anywhere higher than what he is today in the Democratic Party. And he surely does not represent the future of the Democratic Party. Now, just to continue the point, you all probably know that there were recently there were primaries in New York City, and anyone who Mamdani backed in those primaries did extremely well. And all of these people, I mean, it's quite remarkable. This is New York City. These are local politicians. The last thing they should be doing is discussing geopolitics. But what was the their top campaign priority? What was the thing that each one of these pro-Mamdani candidates focused on in their campaign? It was Israel, Iran, Gaza, genocide, right? This carried the day. Now, what's remarkable in these Democratic primaries is that all the people who voted for the pro-Mamdani candidates, these overwhelmingly are upper class, highly educated, Ivy League educated, upper tier US colleges. These are the people who are voting for these radical politicians. Interestingly, there's one other politician in the Democratic Party who's sane, and he is the representative from the Bronx. He's a congressman from the representing the Bronx. His name is Richie Torres, and he happens to be pro-America and pro-Israel. And the area in the Bronx that he represents, it is a lower income class, non-college educated, certainly not Ivy League educated. And Richie Torres won. So you have this situation in America where the more educated you are, right, the more prestigious the college you went to, the more likely it is that you're going to vote for the radicals. You're going to vote for the barbarians. You're going to vote for those who support terrorists. This is the state of the Democratic Party in the United States. Again, what the Democratic Party is doing, okay, people who say it's a genocide in Gaza, they know it's not. But if you don't say it, you get bullied and you have no chance to go anywhere in that party. By the way, this is a classic authoritarian or fascist tactic. You say things that are blatantly false, and you say it because that's how you prove your dedication to the cause, the dedication to the party. You put the party above truth, right? This is what, by the way, before it was Gaza and Israel, what was the issue of the day? What was the issue of the day? It was transgender, right? Just to make this point to show how crazy the party has gone. In the United States, to put any medical drug on the market, any medication on the market, a medication needs to go through years and years of testing before it gets released, right? And it's able to be used by the public. What about sex change surgery? Did that ever go through any testing? The psychological effects of someone who, who transitions from a man to a woman or a woman to become a man? Was there any testing? Was any research ever done? No. It was just fully embraced. Even though it's complete insanity to allow something like that before research is done on it. But no research was done on it. No testing. And now we know that there's incredible psychological damage to people who go through these transition surgeries. The suicide rates among these people who have gone through transition surgery, are off the charts. But this is just another example. You have to say the craziest things, you have to do the craziest things in order to pass the purity test. And the new purity test again is Israel, Gaza, genocide. Okay, I set that as this is all we're building up to, has Trump lost touch with his base? And I'm just giving an example of what's gone on we have a two-party system. One of the parties in this country has completely gone off the rails. Now let's turn to the Republican Party. There's a perception in the Republican Party that the party should really distance itself from Israel, right? Tucker Carlson has been at this for a long time. Candace Owens predated Tucker Carlson, right? She started it. Megyn Kelly has joined in, and J.D. Vance is on the bandwagon. We need to distance ourselves from Israel in order to connect with the Republican base, because Israel is getting in the way. And Vance has been saying over and over again, U.S. interests and Israeli interests often diverge. And he's suggesting that now our interests are really diverging over Iran. The question is Vance right about this, right? And it's pretty clear that the data does not support J.D. Vance's claim. And there's been some interesting polling done in recent days that I want to highlight. And the bottom line is the reports that the Republican Party is fracturing over Trump's decision to go to war with Iran, those reports have been greatly exaggerated. So there's a poll that was just released a couple days ago. It's the pollster. It's called JL Partners, and it shows that 83% of Republican voters say that they either strongly or somewhat support Operation Epic Fury. Okay, Epic Fury was, the war that we launched starting on February 28th against Iran. So 83% support the war as of today. Only 9% say they either strongly or somewhat oppose it. So this is an 83 to 9% issue, right? 83 support, 90, not just 9% oppose the war. That is as overwhelming as it gets. There was another survey done by the Reagan Institute. I've mentioned the Reagan Institute in their polls in the past. 75% of Republican voters support Israel and favor supportive U.S. policy towards Israel. 75%, that's overwhelming. So these two surveys make it crystal clear that these claims by J.D. Vance and others that Trump is losing his base over Iran and Israel, they're completely off the mark, and they're not backed up by polling data at all. Now, I mentioned that J.D. Vance has been talking about we need to distance ourselves from Israel. Something that I find remarkable, he's been asked on several occasions, what does he make of the claims of genocide against Israel in Gaza? And every time J.D. Vance is asked this question, he just talks about the importance of negotiation, that Israel can't solve all its problems through war, right? He dodges the question. He dodges the question, which is absolutely remarkable and incredibly dangerous. J.D. Vance repeats these ideas that the IRGC, right, the terrorist army of Iran, that today they've been transformed. He calls them sane people. And he talks about how amazing it is that we're talking to these same people today. Like how remarkable. We're sitting down and having real discussions with them, as if the Obama administration and the Biden administration never sat down around a negotiating table with these same people, right? Both Trump and Vance, both of them has said we are dealing, they've used the words nice people, right? Clearly, they think that the war is unpopular with their base, and this type of language will resonate more. Now, for Trump to say this, right? Clearly, Trump is getting terrible advice by his advisors, by people like J.D. Vance, by people like Steve Witkoff and Jared Kushner. But he's listening to them for now. Um, on the same theme, Trump likes to call the president of Turkey, Recep Erdogan, a good friend of his. This is absolutely mind-boggling. Erdogan regularly says that Israel is a genocidal country. It is an occupying country, and uh, that that Turks and the Arab world are in a fight for their survival against Zionism. Right? These are Erdogan's words that he uses them every single day. This is the one that Trump is calling his friend, that he has a great relationship. We know Trump does this all the time, but these are dangerous words. And they're dangerous words because you're encouraging the worst sort of leaders and terrorists in the world to behave aggressively towards the United States and towards our allies. Erdogan just yesterday said that Turkey will one day take control of Jerusalem. This is the guy that Trump is calling his buddy. Not only is Trump calling him his friend, but Trump is seriously considering sending Turkey some of our most sophisticated military weapons, our fighter jets, F-35s. He's seriously considering shipping those to Turkey. That would be a disastrous mistake. Now, Trump is taking this turn. It's almost inexplicable. Vance is all in on it. And yet we're seeing Trump's relationship with Republicans in both the Congress, both in the House of Representatives and in the Senate deteriorate because Trump is taking this stance, right? You look at someone like Tom Cotton, one of the leaders Republican leaders in the Senate. He can't believe what he's hearing. He never criticizes Trump publicly, but for sure he can't believe the words out of President Trump's mouth. And at the same time, Trump's approval rating is plummeting. He's now at just somewhere between 33 and 34% approval rating. And where is he hemorrhaging support? He's hemorrhaging support from his own base. And that's a problem. That's a problem. And it's more than likely to hurt him pretty badly and hurt the Republican Party badly at the midterms. They're doing all of this, right? They're making these turns because they think this is the message that's going to resonate with the base. It's not going to resonate with the base. And in fact, it's going to push a key part of his base, the evangelical Christians, away from him. And they might just sit out, many of them may just sit out the midterms, which would be quite damaging. Now, what's very interesting throughout this process, you have Marco Rubio, who had been completely quiet in the last few days, certainly over the last week, becoming more vocal. And Rubio is beginning to push back. And how is he pushing back? He's making it crystal clear that Israel needs to stand up for itself against the Hezbollah in Lebanon. In fact, he was instrumental in just negotiating an agreement between the Lebanese government and Israel. Remember, Hezbollah is not the Lebanese government. Hezbollah is a terrorist force an Iranian terrorist force that is occupying a part of Lebanon. And Israel and the Lebanese government share a common interest. Both of them want to root out Hezbollah from Lebanon. So Rubio was instrumental. While Trump has been criticizing Israel and Vance has been criticizing Israel for its actions in Lebanon against Hezbollah, Rubio hammered out a critical agreement between the Lebanese government and Israel that allows the Israel army to maintain its forces within Lebanon with the objective of destroying Hezbollah. That was an incredibly important agreement that would have never happened without Israel's determination and Marco Rubio seeing things clearly. And Rubio obviously convinced Trump and convinced Vance to step back and allow this agreement to be worked out. Rubio has been crystal clear that there's no way that Israel should permit Iranian proxies in Lebanon from continuing to attack Israel, right? And Rubio has also been crystal clear that it would be a dramatic mistake, a tragic mistake, to allow Iran to maintain control over the Strait of Hormuz. Trump hasn't said these things. Vance hasn't said these things. But Rubio is finally flexing his muscle, and he's making some headway. Now, the fact that Rubio feels comfortable saying these things out loud, right? And actually clearly, going against Vance and even going against things that Trump has said, Rubio clearly thinks that the time is right for this. And maybe he senses that Trump is starting to recognize that the advice he's been getting is backfiring. It's not helping him in the polls. It's not helping him on the ground, right? Iran is not cooperating. These negotiations have led to nowhere good for the United States. Iran has profited already enormously monetarily. They've gotten billions of dollars of relief to them from oil exports. So the way I read this is that Rubio is sensing that maybe he's starting to get the upper hand. Trump is starting to see the light. So I do expect our foreign policy to take a positive turn. And at a minimum, we should expect to see Israel back at war with Iran. And I know that they have been planning. They have a whole set of new targets that they've been working on. They have plans ultimately to topple the regime. And I don't think that we're going to, make it to the end of the year without this war restarting one way or the other. And I would expect that, Trump isn't not going to sit back and let Israel take all the glory for defeating the Iranian regime. So I would expect the Trump administration to eventually order our military back into action as well. So I would expect this war effort to ultimately get back on track and for it ultimately to succeed. So let's wrap it up there, guys. And